you're a well-known ladies' man, despite upsetting a lot of people with your comments on female-only awards. Will you ever settle down?
I'm a huge feminist, contrary to popular opinion.
The reason British houses look so cheap is because they're built very cheaply relative to other countries, because as a proportion of the total property cost, most of the money goes into the cost of the land, doesn't go into the cost of the build.
People still want to buy property. People still want to be, we will be that nation of homeowners. Nothing's changed in that respect, despite all the catastrophes that we've had in the past.
Welcome to the Property Funder podcast. I'm your host, Michael Dean. You can find me on the internet at property_funder. I'm here with Martin Stewart. Now, this is part 2 of our conversation with Martin. The first part of our conversation, as you'd expect with Martin, we went down a number of rabbit holes, but we did learn a little bit about Martin's career. And so hopefully that's been interesting, insightful for you. If you haven't watched or listened to that, highly recommend you go and check out the previous episode. I'm going to open up because just off camera, we were discussing Martin's podcasting experience. You were saying that you and a chap on the internet called Mortgage Stew had your own podcast, and you did about 70 episodes. Is that right?
Yeah, we did. I don't think I'm not saying it will never go back to doing it. We started this about 4 or 5 years ago. Mortgage Stew is quite well known on. It'll be on LinkedIn. He's definitely on Twitter. We made all the classic mistakes early on. Rabbiting on about mortgages for 4 hours, thinking that this is what people want when they didn't. And we evolved that over time. We got into a studio in Soho, proper studio, sound engineer. That's the real secret to go up a level, I think, if you want to take podcasts seriously, is get it done properly. And we broke the segments down, and every third episode we'd have someone come in that had nothing to do with the industry. Someone that's climbed Everest or did some free diving in Antarctica, and yeah, exactly. So that was the LM experience. All the episodes are out there somewhere, I think, in the cyber world. Don't ask me about those kind of things, but maybe me and Stu will pick that. I mean, this has been a great exercise for me, because I've forgotten actually how interesting podcasts can be. People make fun of podcasts, but actually I think they're fantastic. So it might inspire me to go back and annoy a few more people.
Oh, excellent. Well, if you ever want to annoy me, you'll
be the first guest on, Michael.
Excellent. You've actually got a question from Michael Lawler from Mortgage Advice Bureau. But before I ask it, and it's maybe a bit of a precursor, there's a character on Twitter called Moving Home with Charlie, and to date he's been made to look like a bit of a right Charlie himself. I've resisted the temptation to call him out, because I think he's got enough people calling him out. But about 12, 18 months ago, he was sort of quite, I thought very oddly, as an estate agent himself, calling out a 35% peak to trough fall in house prices. What was your take on? What was your take at the time? Did you agree with him, and did you? And what's your reflection on that now?
Well, I don't dislike Charlie, because he's a salty character. He's quite disruptive, and he's got strong opinions, and I quite like that. I think we can't all be like Charlie, but we can't all be very boring vanilla either. You need an element of both to create dialogue and debate and begin to achieve things and move things forward. So I quite like Charlie for doing that. I have met Charlie outside of Twitter. He's an interesting character. His intentions are good in terms of what he wants for the purchaser, the home buying market. He wants to try and move that on and move that away from maybe some traditional boring estate agency. And I'll admire him for trying to do that. I don't agree with his 35% predictions. That's a shame for Charlie, because that's what he will be remembered as. He made a prediction which was ballsy.
But do you think he really believed it? I know we talked in the past episode about authenticity. Do you think that's truly authentic? I think he believed it. I think he believed that. Whether that's accurate, that's not for me to say. I don't know what numbers, what data he was using to come up with that number. What was good about Charlie is that he did at least
suggest that the market was going to go through a period of uncertainty and downturn. You called that bit right. If he had not put 35% on it, he might have got away with it. But as you've rightly pointed out, he's now being hung, drawn and quartered for his 35%. And that is a number that will stick with him for the rest of his career. I don't think 35% is realistic. I think house price. My personal take is house prices are too high, and I think we have spent too many cycles trying to keep that bubble pumped. But 35% off house prices right now is an extinction level event for society and the banking sector as a whole, and for that reason, it won't happen.
No, certainly when I saw that figure, I thought that was it seemed very fanciful. Yeah, I mean, the question that we had in from Michael Lawler, and we've got a few from him. So,
you've got nothing else to do.
So yeah, but you know, he said, you know, you've spectacularly called a property price collapse wrong and been made to look a little incompetent on X by Mortgage Mike. How did you get it so wrong?
How did I get what so wrong?
How did you the house price collapse?
There isn't going to be a house price collapse.
Yeah.
There mimight be
so he's misremembering your takes on it.
Mike misremembers a lot, and I'm not saying that to Mike's detriment because I class him as a passing acquaintance. But there isn't going to be a house price crash. But I do think house prices could do with either not growing for a period of time or coming off a little bit, and allowing salary inflation to catch up, because there's a big disparity between average incomes and average house prices. Okay.
Do you think the period of the last 18 months where we've seen, in recent historic terms, I know certainly house prices relative to real incomes, that ratio is not in a good place. But do you think over the last 18, 24 months, as we've seen, let's call it flat house prices. I know there are regional variations, but flat house prices, but we've seen let's call it 10, 15% growth in nominal incomes. Do you see that as part of the correction going forward?
Yeah, I think so. We had this in the late 90s when people realised towards the end of 98, 99 that actually their salaries had grown greater than house prices, and that kicked on a big spurt in house price inflation into the noughties. A lot of that was driven by lax lending as well, but the realisation that actually your pound goes further will only benefit the housing market in the long run. To see house prices continually go up with your salary stagnant makes that dream of home ownership virtually impossible for many people, which is why we now have the 6 times income that Nationwide have launched previously. You've got nibbling at the criteria of all lenders. I think what we're seeing in the market now is that actually it needs more than cheap money to get people moving. And because the first question we get asked as a brokerage is, it's the worst question ever, is what's the most I can borrow? Still get that now. So that culture is still very much alive. Whether people will achieve 6 times income or 5.5 times income, it's debatable. It's a good headline. I don't know how many people will actually achieve that, but it just goes to show you that people still want to buy property. People still want to be. We will be that nation of homeowners. Nothing's changed in that respect, despite all the catastrophes that we've had in the past. People still want to be homeowners. It's happening slightly later in life now. First-time buyers used to be 21, 22. They're probably 31, 32 now. Nobody buys, certainly in London and the South East, without a significant contribution from the bank of mum and dad. Nobody comes to us now without a massive student loan or 2-car PCPs and some private school fees. So it's changing. So the industry itself is having to change to try and accommodate and squeeze more money out of a set salary. The easiest thing to do would be to bring the house prices down a little bit as well. Not 35%, but 10% wouldn't be the end of the world. I wouldn't lose any sleep over that if that meant greater access for more individuals and a fairer market.
Yeah, I don't personally disagree with the benefits to society of reduced housing costs, because that to every cost there's every cost has an opportunity cost as well. And you think about what is that, the money that we're spending on mortgages, which effectively are funding the house prices. What could that money be spent on otherwise in the economy? People talk about sovereign wealth funds and all the rest of it. Well, at the moment, the UK sovereign wealth fund it's housing stock. It's all the money that we waste on housing. Actually, it was an interesting stat that said that the reason British houses look so cheap is because they're built very cheaply relative to other countries, because as a proportion of the total property cost, most of the money goes into the cost of the land, doesn't go into the cost of the build.
This episode is brought to you by J3 Advisory. Recently, J3 Advisory assisted senior lenders in securing replacement structural warranties for 3 independent residential towers after the developer entered insolvency. Despite the challenges, J3 provided full reinstatement value coverage, supported by A-rated capacity, and issued the necessary structural warranty certificates. Do you need precise insurance advice for live and soon-to-be funded schemes? Get in touch with J3 Advisory. Learn more at j3advisory.co.uk. J3 Advisory is authorised and regulated by the Financial Conduct Authority.
I want to touch on supply, the supply of housing briefly. I know you're not in the development spaces in the same way that we are, but before that, I know you're not a big fan of buy-to-let, the buy-to-let market or buy-to-let investors. I suspect particularly the kind of, high net worth, sort of medium net worth, 1 or 2 unit residential landlord. Can you talk people through why you're not a fan of that? And I know that just from your music online.
I've never shied away from that. People think that I'm anti-landlord, and that's not true, because I've probably rented for longer than I've owned, and I have no issue with that. If I had to rent again tomorrow, I'd have no issue with that. I have no issue with the private rental sector as a whole. I think it adds great value, and I think it brings a service, and it fulfills a need. The issue I've had, and I've had for 20 years, is it was allowed to go on for too long, for far too many people, to the detriment generally of the first-time buyer and the wider housing market. So, and I'll argue that until I'm dead, and I'll have no problem having, even though I'm in the industry, even though we arrange buy-to-lets for clients, I do believe that it was allowed to go on for far too long. It was an unlevel playing field. You had unregulated money competing with regulated money. Well, who's going to win that argument? You're unregulated all the time. You can build up a £1 million property portfolio with some lenders with minimal or zero income in the background. How's the first-time buyer going to compete with that when they're at 4.5 times income and affordability assessed? So yes, I do think that unmonitored buy-to-let lending was allowed to run too long for too many, and I think that was a detriment to the first-time buyer in the housing market. And I think this current rebalancing that we have going on at the minute is a positive thing for the market, and I hope that continues. This will not be the end of buy-to-let. Buy-to-let will evolve. It will become much more of a professional sector. And yes, I have called out and rinsed a number of amateur landlords in the past who just watched a couple of programs of Sarah Beanie, popped down to B&Q, got a tin of Magnolia paint, and then told everyone at dinner parties they were a landlord. Okay, I haven't got time for those people. If somebody wants to incorporate their business and be a limited company and build up a portfolio of 50 properties, well, good luck to them. I have no issue with that. But this taking 2 or 3 properties at a time out of the housing supply that's already significantly restricted, using unregulated money at the expense of a first-time buyer, I do have an issue with that.
Yeah, I think you make a good point. I like to be I like to adopt a sort of more libertarian, free market approach. I'm not a big fan of regulation more generally. I'm not necessarily sure you would share, but I do think that there's a line. I think there's a line, and it's maybe you and I would we're probably on the same side of the argument. It's just where we draw, where I draw the line, where you draw the line.
It's probably a wiggly line rather than a straight one,
Yeah.
And that's life. But there was a rental market that worked before the year 2000.
And that's just been warped, I suppose, by.
It has been warped. I'm not saying that buy-to-let is the single biggest factor within that, because the housing supply, the housing market is broken at a number of different levels. That will be immigration. So there's less property for more people. Lack of building. We're not building enough.
I mean, this is where I was. That was my next follow-up question, right? For me.
So the reason why I exist in this argument is to call people out and to say that buy-to-let has not been an influence or a factor. And I'm saying it has been. It's one factor. It's not the sole factor. I'm prepared to admit and own up to the fact that there are many other factors that have broken the housing market, not just in the last 5 years, but probably the last 25 to 35 years. Buy-to-let is one part of that, as is too many people, a breakdown in families, so that you have 2 family units now for one that was previously the case. People, they're downsizing at the other end of the market, where you've got one person living in a 5-bedroom house. The right to buy, arguably, not enough social housing. Loads of reasons why we've got a housing crisis. Buy-to-let is one part of that. Well, I'm just here to remind people of that.
I think you make some really good points, and it's certainly not. I'm not sure we need to debate them, because the points are quite well made. We've got a question here from Lewis Shaw, Shaw Financial Services, and his question is, what do you really think of the AMI? And could you just explain what the AMI is, and when do you, and touching on something we covered slightly in part one, a topic we covered in part one, when do you think proc fees will be banned?
No, it's very Lewis Shaw, those 2 questions. I don't know if you know him.
I think I follow him on X, but
yes.
I don't know him personally.
The Mansfield Karl Marx, I call him. He's a lovely guy. AMI is AMI, Association of Mortgage Intermediaries, which is the trade body. Lewis's question is, what do I think of it? I don't tend to think of it. It doesn't really impact on anything that I do from a day-to-day basis. I think there is... I think Rob Sinclair stepped down as, I don't know what his role was, chairman, emperor, president, I'm not too sure, but be interesting to see who fills those shoes, because I think AMI's been around in its current format for 10 years, and I think Rob's been there from day one. So it'd be interesting to see if there's a culture change that will come from AMI. I would hope that someone like Lewis Shaw will throw his hat into the ring, because he's quite a forceful character, and I think sometimes there's a risk with trade bodies that they become political institutions and they forget about actually what they're meant to be there for, which is to improve the lot of the mortgage broker. And I think the reason why I've never really got involved in AMI is I never quite saw that from my perspective. I didn't really see where the benefit was for me. I'm sure there's plenty of other people that will argue eloquently the opposite side of that, and that's absolutely fine. But for me, I didn't really see that a trade body should be quite disruptive. I think it's almost a union, and I'd like to have seen a bit more of that, and maybe we will. Maybe we'll see that kind of going forward. What was the second question? Proc fees.
Yeah. So and just before we go into that, I mean, just to throw my lot into the ring. Obviously, I don't know AMI very well, but we are a patron member of the NACFB, National Association of Commercial Finance Brokers. So obviously, we're not a commercial finance brokerage, but we engage with the NACFB's members on a daily basis. What I would say is my observations on the NACFB is that they advocate for the commercial finance industry very well. Actually have no objection to the subs that we spend every month. And I think that they act in the industry's best interest and for the broker's best interest. So, so it's interesting to hear you say that. And actually, from my perspective, with the trade body that we are affiliated with, one of, we are, I would say my observation is that they are probably doing what the AMI is not doing. Doing things
well,
that
maybe I'm being unfair. Maybe that is what AMI do. I don't know, because I'm not a member. And
Right.
I'm unlikely to be a member. If that's what they do on the intermediary side, congratulations to them. It doesn't improve or make my life worse by not being a member.
Okay. Well, now for a more spicy topic.
Get on.
Proc fees.
Yes.
And as someone when we started Avamore, and obviously the proc fees, particularly in the non-regulated bridging space, can be quite eye-watering. I always sort of struggled in the early days. I struggled to get my head around how justified they were. From obviously being from the broker side of the fence, and having an inkling as to maybe your direction of travel on it. What's your point of view on proc fees, and do they have a future?
Well, people might not like me as a mortgage broker, as a principal of a mortgage broking firm. They would hate me if I was head of a lender, because I would have pushed this further up the agenda a long, long time ago. That I think it goes back to what I said in the previous episode, that we used to be IFAs. If you look at our DNA, that's kind of where we've come from. You look at the IFAs now, and their remuneration model has changed, not to their detriment, to their advantage, and it's helped create value for their business along the way. We are still, as an industry, being paid exactly the same way that we were 25 years ago. Nothing has changed. All our income, or the vast majority of our income, goes through a third-party mortgage club, who then take a percentage of that and then pay it to us. Well, why is that happening in 2024? There's no need for that, but that's happening. Do we need procuration fees, or can we work towards a fee model, which is where the IFAs are? And if we are professionals as solicitors and accountants, which I think we deem ourselves professional, whether we act professional at all times, I'm not too sure. But is there a reason why we can't move towards a fee model? Has anyone looked at it, or is everyone just happy to carry on with the status quo?
So I guess for the few listeners and viewers who don't know what a procuration fee is, it's effectively a fee that you're paid by the lender, even though the lender is not your client. The client is obviously the person you're advising. I imagine I imagine the uninitiated viewer or listener who isn't familiar with the sector might think that was slightly odd. And I'm just playing devil's advocate here. I do understand some of the dynamics that are going on, but someone who wasn't familiar with it, they might think that there was a conflict of interest where you're paid by the lender, but the person you're advising is the person who is ultimately taking out the mortgage.
Well, yeah, I mean, regulation is meant to stop that from happening, and I would imagine a vast amount of times that does happen. That might get a little bit murkier if it's a little bit more specialist, where the procuration fees might be slightly higher. It's not really a market I'm in, so I can't say for sure. The way to remove that bias or potential bias is to do away with commission, which is effectively what the regulator did with the IFAs back in 2012. So if you're concerned about bias and value for money, because as a lender, if you're accommodating some of your margin to pay an intermediary, does that go back into your bottom line if you didn't have to pay it? Could you be more competitive, or could you improve your processes? Is there something else that you could do with that money to the benefit of the consumer?
I mean, the simple answer to that is yes.
Well, I would imagine it's the same for the Halifax.
Yeah. Yeah.
And any other lender.
Do you see that changing anytime soon?
Well, I'd change it, but I'm not in charge. So,
do you feel like there's sort of vested in it's going to take some time for the vested interest to sort of
die? I don't know. I mean, any downturn, I thought this was going to happen in 2008. If I was heading up a major lender or the regulator, that would have been the best time to do that, where the industry was on its knees. All right? Kind of went the other way. So maybe the opportunity was lost. But there is another way to reinvent. You know, you keep on doing the same thing time after time, you end up with the same result. And that's where we have been now for 25 years. Are you telling me this is the only way to give intermediated advice is with a procuration fee? Has anyone tried to come up with another model? There is one. So what I would do, okay, is I think we are professionals. That's what I think. I think we're the same as solicitors. I think we're the same as accountants. We should be charging a fee to the consumer for the service that we provide. I have to go on a lender's panel. I have to go on Halifax's panel to, inverted commas, distribute their products. Okay? Well, I don't distribute anyone's products. I give my client advice. I do not sell a mortgage. I do not distribute products. That is not me as a professional. To tell my client what I think the best thing for them to do is. So why am I going on a panel? What we could do is we could turn that around, say to you as a lender, why don't you come on our panel and help me distribute our advice? For you to do that, we'll charge you a fee. It will be less than a procuration fee, but it'll be something to help smooth out the unequal balances that will come by removing procuration fees. Because the industry could collapse if you get that wrong, because there'd be no one's got enough money to give advice. But if I was trying to come up with a model, I'd be charging the consumer a fee because we're giving them regulated advice, which may or may not result in a product, but it's still advice. My accountant still charges me, whether my tax bill's 10 grand or zero, I'm still getting charged. My solicitor will charge me for whatever transaction goes on. But you come on my panel, Michael, and you pay me X amount a year to be on my panel, and we'll have a 3-year contract and we'll review it every 12 months. You will save money as a lender if you did that, because you won't be paying larger proc fees. Then we've got a better working relationship as an intermediary and as a lender.
It's an interesting one. Certainly, I mean, there already are some quasi arrangements that sort of have similar components to that in non-regulated space. Actually, you know.
If I did that with 50 lenders, and I'll just make the numbers up here, if I charged every lender £5,000 a year to come on my panel, what has that given me as a business? Value. I've got a 3-year contract that's worth £250,000 a year.
That's interesting.
Suddenly, as a mortgage brokerage with no value, I've suddenly got a value. So it's a better working relationship with the lender. My job and your job is to look after that client. That's all it is. Nothing more, nothing less. And the closer we work together to make that happen, the better.
Yeah. Well,
to answer Lewis's question, don't hold your breath.
Yeah, I mean, but I think if anything, we've definitely got some spicy. There's definitely some spicy stuff in there.
That's me not going to any more Christmas parties.
Well,
except maybe the Avamore one.
Yeah, well, that can be arranged. Okay, well, out of the frying pan into the fire. We have another one from Michael Lawler, and you may need to. It's a good thing you're sitting down. And I imagine this comment is tongue in cheek. You're a well-known ladies' man, despite upsetting a lot of people with your comments on female-only awards. Will you ever settle down?
I'm a huge feminist, contrary to popular opinion. I'm also equal opportunities. I make fun of everyone. Yeah, that's male or female or anything in between. That comment from Mike is very, very tongue in cheek.
Okay,
and I probably don't get a fair press because some people, I might just drop into someone's thread on LinkedIn and or Twitter and say something, and it's very easy to say you can't say that or that's inappropriate. Well, it's not. It's just a comment. But I think there is a risk that could snowball into a myth about me being something I'm not. It goes back to what we said about authenticity. I'm very authentic. Some of my best friends are female. I don't think they would want to hang out with me if they thought I was anything sinister.
I mean, do you have I haven't seen any of your comments on female-only awards. Do you have, what do you really think of them?
Well, you shouldn't have them, should you? In a world of equality?
You think in this day and age, actually, do you at least acknowledge that trying to, industry that is overwhelmingly male, do you not at least see the logic in trying to put, the talented women in the industry on a bit of a pedestal, in part not to recognize, not to single them out exclusively, but also to put on a bit of a pedestal that there are talented women in the industry, and to attract additional female talent into what is otherwise a very male-dominated industry, when ultimately 50% of your clients are not men.
My best broker is female. That's Kathy. Okay, and when I say best, I don't mean she's the best advisor or she's most competent. She's the hardest working individual that I've got at London Money, and she came from absolutely nothing 7 or 8 years ago to now being very, very successful. Okay, if I could build a business again from scratch, I'd have 10 Kathys and no men. Now, Kathy doesn't want me to put her on a pedestal. She's not interested in that. She'll have her own metrics for success and what she believes she's doing the best for her clients, and she'll manage herself in that respect. She'd probably be more embarrassed if I put her on a pedestal. And I think there are other women. Jane King is a very good example of someone who's a very successful female broker who would be horrified if she was nominated for a women's only award, because she wants to pitch up against the blokes. And, nothing wrong with that. Listen, there's nothing wrong with having an award ceremony. There's nothing wrong with being nominated for something if that means something to somebody else. It's a shame that we have to have the debate. Why do we have to have the debate in this day and age? Aren't we all equal? I thought we were.
Just following on from that, we have a question from Adam Stiles, which is, what do you love and hate most about the industry? I mean, you've obviously just said hate proc fees and female-only awards, but anything else?
I don't hate proc fees because that pays for my lifestyle. I just think there's another way to do it. Yeah. That's better for the industry. It's better for the lender, for the regulator, for the consumer, and ultimately for the broker. I don't hate women's only awards. They're not for me. I don't think women need that. I think they're good enough in their own right. What else?
Obviously, there was a tongue comment from me there. What would you say? But what would you say? What were the things? Per Adam's question. Why don't we start with what do you love? And are there any things that apart from what we've already discussed, or any other things you'd change?
I like helping clients. That's ultimately why I'm in existence. London Money is nothing more than a commercial conduit to assist somebody with a need. That's what it's there for. And I love that part of the job. I still speak to clients on a daily basis. I speak to clients to find out their why. Why are they doing it? Why do you want to do this? Why do you think that's a good idea? I don't understand the how in terms of, we're going to use that lender for that particular reason. So I'll always give that to a member of the team to deal with. But I'll always have that first point of contact with my own clients to have that conversation. I'll never get bored of that. That's the best part of the job. Outside of that, there are some decent people in the industry, and I know some of them socially, and I work with a lot of them. The questions that have come in today from Lewis and Adam, and even Mike to a degree. These are interesting characters that I enjoy spending time with outside of the office, and I never get bored of that. I like the lenders. I'm a huge fan of lenders. I will always call out someone calling out a lender. I just don't see the point of that. Don't forget, as intermediaries, that means we've got two clients. We have the consumer and we have the lender. We wouldn't speak to a client the way some people speak to lenders. Now, give praise in public, that's fine. And if you're going to criticise, you're better off doing that in the DMs or, on a phone call. I just don't understand why, because someone's trying to do their job at that lender. Then we don't get everything right. Brokers are not infallible. They make as many mistakes, if not more, than lenders do. And they wouldn't want to be called out in public by their client for that mistake. So I don't think we should do that with lenders. And that's that's one of the things I don't like about the industry, is that inability to see how important the lender are. So if you've got a client, a lender, and a mortgage broker, all right, which one of those can you live without and still have an active housing market? It's a loaded question. Okay, so let's just remember our place in the food chain. Okay, we're subservient to the lender's need and want to lend money, and we're subservient to the consumer's need to want to borrow that money. So I think we need to treat both with equal respect.
Well, obviously I'm going to say this as a lender, but yeah, I agree. I agree wholeheartedly.
So I say to listen, we have a great relationship with our BDMs, Michael. They come in and we'll talk about everything other than mortgages because we see them as humans, we see them as individuals, and cynically we do that because you never know when you're going to need that lender as well. If something goes wrong, I want to ring a lender and go, can you help out with this? And they'll go, yes, we can. And I know we had a couple of BDMs in recently who said that they've been in and left an office crying because of the way a broker has spoken to them. If that happened on my watch at London Money, that broker would be gone, not the BDM. So it's important that we have that culture, that we have to respect that lender. It doesn't take a lot to do that.
Well, very well said. We're going to have to draw things to a bit of a close, but we've got one last question, and it's another excellent one from Adam Stiles, which, Adam, I think I'm going to be stealing this one for all of our guests. It's a bit like the Peter Crouch. If you weren't a famous footballer, what would you be doing? But if you weren't doing what you do now, what else would you do? Again, question from Adam Stiles.
What would I be doing? I would have to be doing something. When's this going to go out, just out of interest?
Well, you worried about being cancelled or something like that? But
no, that's already happened.
Probably sometime mid-October.
Okay, fine. So I would have to do something creative. Okay, so I don't class myself as an academic, and if you saw my school report, you'd understand why. I'm not overly talented physically. I'm not practically minded, but I think I can be creative. That would be something that I think if I could, in hindsight, have developed sooner. That's not to say I can't do it now. You can be creative at any. I think my days of a Premier League footballer are possibly over. And I think that's definitely gone. But I can still be a creative. To be able, and I say this to my son, I said, whatever you do in life, just make it creative so that when you go in somewhere, every day's different. You've got a blank bit of paper and you're told to come up with something new. Imagine having that job every day. That would be fascinating to me. What that looks like, I'm not too sure. But to be able to create something that has some longevity, some long-standing, and brings a degree of entertainment to people's lives, that's probably a missed opportunity for me.
Maybe sometimes you make up for it with your sardonic tweets.
Well, if we could maybe bring those tweets into an anthology and then publish the book off the back of that, maybe that's the solution to that one.
Another couple of years, maybe we've got enough there.
There's definitely enough tweets there. Don't worry about that. Whether the quality is high enough, I'm not too sure.
Well, we'll let the audience be the judge of that. Martin, really appreciated you coming in today. It's been great conversation. I think we could probably go for another couple of hours.
Yeah, absolutely.
Beyond the two that we've had. So yeah, wanted to thank you for that. If anyone wants to reach out to you, get in touch, what's the best way of finding you?
Well, you can get me on Twitter, which is @LondonMoneyFS. If anyone wants to slag me off directly, you can drop me an email, and my email is on it's on our website, london-money.co.uk, or I'm on LinkedIn, as you are, Michael. It's very hard to hide these days. If somebody wants to come and get me,
you're not doing a very good job of hiding, to be fair. So, which is to your credit. Well, thanks very much to our audience. Thanks to everyone for tuning in. As you all know, I'm @probby_funder on the internet. Also want to give a shout out to J3 Advisory, who are the current season sponsors for the next few episodes. And you can see their mugs on the table. Anyway, for now, thank you very much, Martin.
Thank you,
very much appreciated you coming in, and we'll talk to you again soon.
Thank you.
All right, cheers. Bye.